Hello and welcome everyone to Tackling the Cyber Insurance Renewal Riddle. Presenting today is Gui Cozzi, Cybersecurity Practice Lead at Dean Dorton, and Jock Wols, CEO and founder of RiskDesk. We will be covering all things cyber insurance throughout this webinar. If you have any questions throughout the webinar, please use the chat feature in the bottom right-hand corner of the screen. We will be monitoring it throughout the presentation and will make sure to share any technical questions with our presenters at the end. If we do not address your question during today's presentation, contact information is included at the end of the materials, so please reach out after as needed. This webinar is being recorded and will be emailed to you by the end of the week. Thank you so much for joining us today. Do not hesitate to ask questions, and without further ado, I give you Jock. Jock, you're muted.
Well, that started off well, but hi everyone. My name is Jock Wols. Welcome to the presentation today. I'm an insurance broker at RiskDesk. RiskDesk specializes in cyber liability, professional liability, and management liability insurance solutions. We work with various industries, most notably professional service firms, lawyers, accountants, architects, engineers, and technology companies.
Thank you, Julia. Thank you, Jock. Good afternoon, everyone. My name is Gui Cozzi. I'm the cybersecurity practice lead for Dean Dorton. With about 20 years of experience in cybersecurity. And at Dean Dorton, I lead a team of cybersecurity consultants where we provide security assessments, pen testing, information security program implementation management, managed security services, and forensic and incident response services for clients across the US. So we're excited to present this topic to you. Actually, Jock and I did a precursor to that presentation a few months ago, and we thought that there were so many changes in the cyber insurance area that we wanted to provide an update. So thanks for being with us, Jock.
Yeah, absolutely. Thanks for having me. And as Gui was saying, the objective today is twofold. One is to provide you with some insights into the cyber risk and insurance market from the perspective of the insurer, but then also to provide you with some key actions that can help you manage your cyber risk and insurance process. Just to piggyback off what Julia had said, we've got some time allocated for questions. Certainly ask them throughout the presentation. If anything's critical that we can answer then and there, we'll do it. But there's plenty of time allocated for a Q&A session. The brief overview of the agenda will address the cyber insurance market or the state of it. Talk about the insurance application process, any kind of coverage implications as a result of the cyber insurance market. We'll talk about the security requirements and then sort of highlight a couple of the trends that we've seen or anticipate to see in the near future. The cyber insurance market itself is going through a major change right now, and really, the only reason why this change is happening is due to the severe claims activity and the adverse loss ratios that insurers are incurring. So 2020 was the first unprofitable year for the cyber insurance market as a whole, and 2021 at the halfway stage was worse than the entire of 2020. And really, what we're seeing is claims are increasing in frequency on a per portfolio basis, and the severity of those claim payments are increasing. So that is driving the change in the insurance market, and it's got an effect on policyholders and insurers in a couple different ways. Most notably, insurers are re-underwriting their portfolios, and that means premiums are increasing between 50 and 250%. That's not for someone who's incurred a claim or someone who's viewed or some business that's viewed as a higher risk profile. the base premium is basically what insurers are telling us is inadequate at current rate levels. So across the board, insurers are increasing premiums between 50 and 250%. And that's, if you read any feedback or financial statements at insurers at the quarterly results, that is consistent with what they're sharing. Secondly, coverage is being impacted. So what does that mean? Insurers are looking at the coverage and saying, hey, what are the problematic coverage parts of the policy that are leading to claim payments? And what do we need to do about that? And I'll get a little more into that. And then thirdly, there are heightened cybersecurity requirements, and that's where kind of Gui and his group kind of come in terms of the insurers saying, we need to have a minimum set of best cybersecurity best practices, and if you don't have those, either you're ineligible for a quote or we will take away coverage parts. So that heightened cybersecurity, those heightened cybersecurity requirements are a big driver right now. So those are the three kind of things that insurers are doing. There's other impacts that are also experienced. The turnaround time that underwriters are responding with quote options is significantly slower. And that's for two reasons. One, there's a major increase in demand for cyber insurance. So the market is nowhere near a saturation point. Claims are happening. Businesses who hadn't been insured in the past are looking for options. So that's one driver of slower turnaround time. The other part is, certainly with my clients, we market the insurance application. So in the past, if we would approach 2 or 3 insurers, knowing those were a good fit for a particular client, today maybe 8, 9, 10 different insurers, maybe even more. Depends on the insurance program. So underwriters are seeing a major influx because of the marketing exercise that brokers are kind of going through. Insurers are also forced to manage their capital a little better. In other words, the limit of liability that they deploy. And so and this could have an impact on businesses that have maybe a $10 or $20 million cyber insurance program, or even more, where the number of insurers that are offering a single $10 million limit policy or $20 million limit policy is dwindling. And so what that means is that as an insurance broker, you'll have to structure those programs with multiple insurers. The insurers are clearly concerned about the severity exposure, and so they're trying to manage a risk from that perspective. But that in itself, again, restricts the number of markets you can access, but also impacts the turnaround time. And then lastly, what we've also seen is some insurers are just saying, hey, we've had enough in the cyber insurance market. We don't see a path to profitability, and that's why we're pulling out of. How that impacts the insurance application process is in a couple different ways. I say preparation starts today, but in reality, this is an ongoing initiative, and maybe not necessarily the insurance application process, but your cybersecurity process. It's an ongoing initiative for you and your organization. So you have to be proactive. And from an application perspective, from the insurance application, basically the information that you disclose to the underwriters, you need to start that process as early as possible. And really what we're looking at is to kick it off at least 90 days prior to the expiration date of that policy. 90 days because that gives the applicant some time to complete that application. That renewal application or that insurance application can then be reviewed. Any kind of coverage, any cybersecurity deficiencies that I may be able to identify, or the IT Ben partner or consultant may be able to identify. It gives you some time to correct those. So it's not just about getting the quote. It's also about, okay, what has changed from the insurer's perception from last year to this year? There will be different types of questions. That insurance application questions will have changed, and it's purely because the insurers identified correlations between the losses and some of the responses. So they'll be looking at, so you'll be answering these questions, and if there's a negative response on a question, you want to be in a position to give yourself some time to correct those deficiencies or address those deficiencies. And so really the 90 days sort of, that's a decent amount of time to kick off that process, and then you want to get your paperwork done and dusted by 60 days prior to, at least 60 days prior to the expiration date of that policy. And so, one of the things that we sort of recommend is like actively work with your consultants, actively work with individuals like you at Dean Dorton to kind of be ahead of that. I talked about the premium and the change in premium. So one maybe understated action item is collaborate with your finance department, collaborate with from a budgeting perspective. You don't want to get a surprise. Manage that communication, saying, hey, this premium is going to change from between last year. Don't plug in the same kind of figure. Recognize it's going to go up. And then obviously from a turnaround from a timing perspective, like I mentioned, the turnaround time is significantly slower. And if you think about some of the implementations you may be required to do, you want to give yourself enough time to kind of be able to action those items. And even if the insurer says, hey, you've got your application out, it'll take them some time to kind of filter back some responses. And as part of those quotes, even if the application checks out, they may have more questions. And I've seen a perfectly completed application with 5 to 10 additional questions, and then you have to kind of collaborate with your IT, with your IT consultants and vendors to kind of provide those type of responses and basically give them the information. I'll talk about the coverage a little. There are, as I mentioned, insurers have identified certain coverage parts that they're really honing in on. And the most notable one relates to social engineering fraud, which is social engineering fraud. For those of you who don't know, that it's also referred to as deceptive communication. An example of social engineering fraud is phishing or smishing. Basically, the cyber criminal tries to trick the target into taking a certain action, and that action often represents providing credentials or wiring funds to a wrong or fraudulent bank account, things like that. So insurers are looking at that coverage part, and if you think about the actual risk or the threat, it represents there's an element of human error. This is not a cyber threat where someone's trying to break into a system or break it down. This is the victim is an individual who gets tricked into taking a certain action. So there's an element of human error. And so one way to kind of combat that is through training and education. But from a coverage perspective, and just driving general awareness around that these threats and these risks exist amongst your staff and your employees. But from a coverage perspective, what insurers are doing is they're saying, hey, we're going to cap our exposure to that, and it's typically sublimited at $100,000 to $250,000. If you have a policy in place that's got a higher sublimit than that at the moment, expect to see a reduction in that coverage part. I've worked with several law firms, and that's clearly an area of concern for those firms. If you think about them having access to escrow accounts or being part of an environment where they may not wire the money, physically wire the funds, but they may be in an environment where they could get tricked into taking a certain action, providing fraudulent bank account information or the wrong bank account information. So that's a pretty, and the transaction that some of these firms are involved with are certainly higher than $250,000. So that is a problem. And right now, I've got pretty much only one insurer left who will offer a limit higher than, or a sublimit higher than $250,000. The other part around the social engineering fraud coverage part is that insurers are looking, and they had started doing that already last year, but they're looking at processes and procedures that are in place to mitigate that risk. And so really all that means is we refer to it as dual band authentication, or just another form of multi-factor authentication. When you as an individual receive communication electronically that says, please wire money to this account, or please change the bank account information, or add this bank account information to a system, do you verify or authenticate that request? And usually that request should be done via a phone call. So think about your own organization's processes and procedures. I would expect that most of you will have that in place, but it impacts the eligibility of the coverage. It's not going to necessarily change that $250,000 sublimit, but in some cases, and you've got to read the policy form, it's also a condition of the policy. So even if you've got that procedure in place and someone forgets to do that, that policy, if that carve-back is in place, they may deny a claim if you didn't verify or authenticate that request. So social engineering fraud is the one that's a hot topic right now, and that's probably the number 2 driver of claims in cyber insurance world, and that's why it's getting so much attention. The other coverage part that I wouldn't say necessarily concerns me about, but that you have to be diligent about, is funds transfer fraud. And some insurers, they loop funds transfer fraud and social engineering fraud under the same coverage part. So you just have to understand it's in some cases it's referred to as cyber, or described as cyber crime coverage part. You just have to understand what the coverage is that's granted. And really the issue that you need to kind of look out for is funds that are either your own funds or funds under your control. So if you think about that escrow account example, or a lawyer providing the wrong bank account information that the sale of the real estate transaction has to kind of go to, they don't necessarily control those funds, or they're not their funds. But if they are involved, if they provide the fraudulent instructions due to intercepted communication, that claim would probably, or that litigation would fall back on them. They will be looked at as responsible. So if the policies, it has this restriction that it's only providing you coverage for funds under your control, or funds, your own funds, then you wouldn't be eligible for, then you would potentially be out of pocket. That would potentially be an out-of-pocket loss. So again, cybercrime, funds transfer fraud, social engineering fraud, those should be high on your radar screen in terms of coverage restrictions. There's several other coverage restrictions that you can try identify, and often you can do that via the quotes or the declarations page. So we talked about sublimits related to social engineering fraud. The other sublimit that I have seen start to creep in is around a ransomware event, and those sublimits can often be driven by cybersecurity practices. If you don't have MFA in place, or only MFA in place for certain roles or responsibilities, a ransomware event sublimit could be applied. So you may have a policy limit of 2 million, 3 million, 5 million. The insurer will say, hey, the most we'll pay for ransomware is $500,000. So similar to kind of that social engineering fraud. But there's more of so kind of be careful around that. From on the one hand, ransomware tends to be the demand by the cyber criminals tends to be somewhat arbitrary in the event that it's a negotiation between the cyber criminal and the victim, and certain things can influence the payment of that demand. Things like, have you backed up your information, or have you done certain things, or what what part of your system is suffering the ransomware attack. So, and what is your policy limit? And so that's part of the reason why there's this, what are the funds available to you that you can pay that ransom. So sublimits in general, just review them. Some are more important than others, but that's one way to kind of compare coverage. Deductibles, similar in a similar kind of capacity. If there's sub-deductibles applying to certain coverage parts, just be aware of those. Applies in a similar kind of capacity, and as the sublimit, it applies to a coverage part. So again, it's just be aware of that. And I've also seen co-insurance requirements start to creep in a little. And in one particular insurer, they have a risk management tool in place. And if the policyholder doesn't subscribe to it, they are subject to a 25% co-insurance requirement, meaning that, and specific to ransomware, meaning if the insurer, if the policyholder doesn't subscribe to that risk management tool, they suffer ransomware loss, let's say $10,000, they will be responsible for 25% of that, regardless what their deductible is or what the limit of liability is. So, yeah. So from an insurance checklist perspective, I mean, we've kind of covered. These are the things to look out for. You know, start the process early. Work with your with your IT partners and vendors and consultants, and just be proactive. This isn't a coverage right now or an application that you want to put off to the last minute. This should be high on your priority list. You know, budget appropriately. You know, take a more conservative approach, and then once you get those terms in, you know, identify what some of the key coverage restrictions or changes are, and sometimes it also depends what industry you operate in. So Gui will talk about some of the security prerequisites that, and a lot of times these are what the insurers are looking for and asking for. Just to kind of give you a bit of a background or some insights, some of the key underwriting questions that have been asked over the last 12 to 24 months. You know, they focus on multi-factor authentication. Multi-factor authentication basically means you log into a system and there's a dual verification of that login request is legitimate. There's no insurer right now that will offer you an option without multi-factor authentication, or if they do, they will exclude any claims that stem from that type of vulnerability. So if your organization doesn't have that in place right now, even in the absence of the insurance policy, get that implemented ASAP. I mean, that is the number one thing, the number one driver of claims right now. The callback verification process, I talked about that in terms of the social engineering fraud component. So again, if you don't have that in place, doesn't necessarily mean you can't get a quote, but you may be ineligible for that coverage part. And again, it's use that risk management tool or process to mitigate and reduce your own risk. The backup of data is important, especially when it comes to ransomware. It doesn't prevent a ransomware attack, but it gives you flexibility and options in terms and negotiating leverage if you do suffer a ransomware attack. And then lastly, training or education around, and most training and education is revolved around that human error element or that social engineering fraud piece of it. And then lastly, you know, again, work with your partners. These threats are going to continue to evolve, and so will your cyber security and insurance requirements. So just recognize that this isn't a kind of static exercise; it's an ongoing exercise.
Thank you, Joe. Can you hear me okay?
Yeah, it's loud and clear. Thanks.
All right, lot of good information here. So one element that's going to impact the coverage that you need and also the kind of the risk that you present to the insurance company is the kind of data that you handle as an organization. So a very broad category is sensitive data. And there are several buckets under that sensitive data. I think it depends on where you are, where you operate, the kind of data that you have, the kind of business that you're doing. But something that's critical to understand here is when we talk about personal identifiable information, there's a lot of privacy and security regulations that are going to mandate some kind of actions or notification at a specific threshold if that information has been accessed by a threat actor, so be part of a data breach, for instance. So when we look at the cost of a security incident that would entail unauthorized access to that sensitive data, if we think about the average cost to remediate the incident, notification, et cetera, it's about between $140 and $150 per record. It varies greatly across industries. For instance, if we talked about EPHI, electronic patient health information in the healthcare industry, you've got a complete PHI record. The average cost is well above $400. So the information that you have is really going to impact your risk, the coverage that you need to ask for, and what you're going to aim for. So kind of know what you have. A lot of organizations have some challenge to really understand the magnitude of the sensitive data that they have and what would be the risk to that kind of information. So next slide, please. So what are we looking for? And the next couple of slides that we've put together, we've basically looked at many applications, many cybersecurity insurance applications that we've reviewed, helped clients to go through, and we've compiled kind of all of the different kind of questions and requirements that you might see on some of these applications. So one of the first set of questions is around your security program. And that's really regardless of your size. Small business, large organization, you have to have some kind of program in place. You have to have somebody who is going to be focused on information security. It doesn't have to be a dedicated person, if you don't reach that threshold from a size perspective, but you're going to have somebody who's going to be dedicated to make sure that some of these processes are in place. You're going to have to say that you have some kind of security policies and procedures. So looking at your information security policy, an acceptable use policy that is going to let your employees know the expectation from a security perspective. So, how to go to training, how to identify a potential security incident, how to report it, what kind of password they can use, what kind of tool they can use, how can they access, transfer, and share that sensitive data that we've talked about. Most organizations also share that information with third party. So looking at, do you have the right agreement in place and steal your information, even though you may share it with a third party. So what kind of legal protection you have around that, and do you have a way to make sure that your partners are accountable? And then from a security framework perspective, it's going to depend on your level of maturity and industry, but it becomes a kind of a standard to have some kind of security framework in place. And the security framework really is a repository of security controls. You do gap analysis on that framework, and you make sure that these controls are assigned to the appropriate personnel within your organization. So for instance, if you have an onboarding process that's going to entail training and creation of an account with the least amount of privilege that may be assigned to a specific IT person that's going to go through that process. So it's a way to document how your security program is and making sure that you've got a roadmap to augment that program. So next slide, please. So from a resilience perspective, also, of course, incident response, having an incident response plan in place, business continuity plan, disaster recovery plan. We've seen that on these applications. And sometimes it's a little bit more specific, right? It's not just enough to have a plan, but you need to have specific playbooks under that plan to respond to specific threat scenarios. So Jock mentioned how prevalent phishing emails are, email business compromise, wiring money to the wrong account, but also ransomware. So how would you react in these kind of scenarios? Do you have the step-by-step processes documented to quickly react? Making sure that you exercise these plans, so conduct tabletop, simulation, making sure that your team knows how to react quickly. And then once you have your cybersecurity insurance in place, you're going to be presented with some recommended firms. If you have an incident, for instance, a forensic firm, an external counsel or data breach coach that's going to guide you through the process, public relation coach. What you'll have as part of your policy is just a list of potential partners. So what we would recommend would be to reach out to some of these partners and make sure that you understand how they would approach an issue, that you've got the right agreements in place and that you're ready to go. You don't want to go through that process if you're facing a serious incident. You want to have that done, the contact established well before you're in that situation. The next slide, please. So we've got a few slides here looking at the checklist of what you can see on this application. So encryption in place for sensitive data. Of course, that's really critical. And encryption is going to help with different kind of threat model scenarios. So in transit, if you're sending, sharing sensitive information with third party, making sure that information is secure, that cannot be intercepted in transit. At rest, so most likely you'll want to do that on mobile devices or devices that are at risk of being lost, stolen, and on the backup. It used to be a very difficult control, challenging control to have in place on backup. It's completely mainstream now. And if you're backing up to media or to a NAS, you want to make sure that that device, these media are encrypted. The next one is privileged access management. It's making sure that your users are not local administrators on their devices, that you're not using shared account, and you're using a different admin account for each asset class, meaning that you have a user. If you got an IT person, they can use their IT account, their day-to-day account to check emails. But if they are doing administrative tasks on your system, then they need a specific account that can only log to workstations, for instance, and a different account that can only log to servers, different account that can only log to domain controllers. There are solutions that make all of that process easy. And the reasoning behind that is if an endpoint becomes compromised during an attack, which is often a very common entry point for ransomware attack, the first thing that the threat actors are going to do is to dump all the password, the credentials on that device. So if a privileged account has logged to that specific device, the password is going to be known right away by the threat actors, and they'll be able to move on the network very rapidly. So being able to isolate how you authenticate to specific devices is very important to minimize the threat of ransomware. That's one of the reasons why we start seeing some of these requirements on the application. Next slide. So Jock mentioned the multi-factor authentication. I would assume that pretty much everybody knows what that is. It's a combination of at least two-factor of authentication. A factor of authentication can be something that you know, like a PIN or a password, something that you have, like your phone, and something that you are, biometric, your palm, your face, retina, etc., etc. So at least two of these to authenticate. It used to be a requirement for all remote access to your network, your sensitive information. So think about emails, for instance, would be included as part of that requirement. But more and more, we see that MFA requirement also on the internal network when administrative access is going to be required, as well as core applications. So if you're a medical practice, you've got an EHR, electronic health record application, more and more that requirement is going to be on that application to use MFA remotely or internally, because once again, so many networks have been compromised, and once the threat actors are inside, we want to make sure that they've got nowhere to go, make their job a lot harder. And employee training education, again, we see more and more specific requirements. It's not just a checkbox to say, are you providing security training, yes or no? It's, do you have a process so that you train your employees during the onboarding process? Do you have ongoing training? So at least once a year, sometimes it's more than that. It's specific to their role. So do they understand their responsibilities from a security perspective? And are you testing them? So very common today is to test your employees to identify and report phishing emails. You can do simulation to see how well they're doing with that. But there's all kinds of different simulation that you have to do, making sure that you're tracking, you're recording the training, and you can provide specific training based on the situation. So next slide, please. Advanced email security. Email is a primary vector of attack. So making sure that you have a solution that's advanced enough to look for phishing, for impersonation attempt. Many of us have received that email from the CEO and the CFO saying that there's something urgent that needs to be done. And that email looks like it's been sent from the CEO or CFO, but when you look closer, it's an impersonation. It's not that specific email. So nowadays, many solutions are catching these emails. URL rewrite, it's a way to look at all of these links in these emails that could lead to malicious website and make sure that they are filtered should your users click on them and get to a malicious website that might ask them for their credentials or to download a malware. And then attachment detonation, it is a technology that basically opens any attachments, email attachment in the sandbox and look for behaviors and suspicious activities before that attachment is delivered to the mailboxes. Then endpoint detection is response. Endpoint detection and response is critical to make sure that your workstations, laptops, servers are protected against some of the more recent ransomware, but also it provides a lot of information, logging information. So if you have a data incident and it's very difficult to determine exactly what happened on the device, what information has been accessed and potentially extracted by the threat actors, unless you've got an EDR on that specific device. And the intrusion prevention system is at the network level. It basically filters the traffic, the network traffic, so it's another layer of protection that that you need to have internally. So next slide. Right. Jock mentioned the backup. We've seen specific requirement as well. What's popular nowadays is what's called the 3-to-1 backup strategy, making sure that you've got 3 copies of the data, 2 different media, 1 offsite copy. There's some variation of that. You can have a read-only copy, for instance, making sure that you're using a different set of credentials. What's typical now when threat actors are compromising networks is they go after your backup and they try to corrupt or delete the backup to try to force organizations to pay the ransom, basically. So having that system in place kind of greatly mitigate that risk. Vulnerability management, that is really the third vectors of attack. We talked about malicious website, emails, having unpatched vulnerabilities is not good. So looking at your perimeter or looking at your devices, making sure that you're doing continuous assessment and patch management. And then, having a third party doing your security assessment, doing a penetration testing, we recommend doing that at least once a year, even if you have a team that's doing that security work internally, but making sure that you've got a third party doing that. In some industries, it is a requirement, but it is really considered the best practice, and more, it is part of that application questionnaire as well. Next slide. Back to you, Joe.
Yeah. So, and I know, and I think we've got a couple of questions which we'll address in a minute, but when you think about the potential underwriting trends, take a step back, and if you sort of wind back 10 years ago, most insurance solutions, cyber insurance solutions, were designed with the data breach in mind. And so, data breach resulting in the loss of information that then led that business to incur expenses related to credit monitoring, notification, IT forensic, et cetera, et cetera. So, as threats have changed or evolved or emerged, so has your cyber risk assessment and your exposure. And really, from an insurance perspective, it is critical that the coverage keeps up with those evolving threats or changes. So, kind of going backwards a little right now is around social engineering fraud, but make sure that those coverage parts are part of the policy. And so, for us, it's always broad coverage is critical. And unfortunately, there's not a standardized insurance solution, partly because of these changes. So you really have to be critical about the solution that you source and really work with your insurance broker and evaluate the range of options. And so if you think about some of the underwriting threats, trends that we're seeing, I'll start from the bottom, and then Gui will address the top 3. But the geopolitical situation right now, that's going to have an impact, most notably war exclusions. That's already been somewhat addressed, or that's already been on underwriters and insurers' agenda. War is an uninsurable event, but never really been tested, or the insurance market has never been really tested around cyber warfare. And so, with what's going on overseas, underwriters and insurers are going to be looking at that and trying to determine how does a business being impacted by a cyber war, how does the coverage respond to that? So that's one thing that's definitely going to come, and there's going to be some changes around that. Sanctions is another thing. If the threat actors are sitting in Russia, can you pay them the ransom demands? So there's things that will kind of play out there too, and then whether this is going to have an impact on regulating cryptocurrency. And really, crypto has been a big enabler of cyber criminals. It allows them to trade very effectively and collect payments very effectively and efficiently. So the geopolitical situation could potentially accelerate that regulation.
In terms of the MFA, we've seen some situations where the carrier was asking MFA to be fully implemented at least 90 days prior to the renewal of the policy. So, don't wait to look for that, especially with the increased requirement of not just having MFA for remote access, but looking also at protecting privileged access internally or to core applications. The logic there is, sometimes you can have threat actors in a network for a long period of time. I'm not really sure I kind of agree with that, but again, that's what we've seen, and so be aware that it's not, you don't want to wait for the last month or so to finish your implementation. You want to make sure that you've got that communication with your broker and making sure that you really understand what these requirements are going to be. And then go ahead, John.
Can I just jump in there, because Renee had asked a question whether you could be denied coverage if a breach is due to the failure of implementation of MFA. And that really depends. If that type of scenario is specifically excluded, then yes. However, what we've kind of seen as part of the application process is insurers will say, do you offer, or does your workforce or your employees have remote access? If yes, do you utilize multi-factor authentication? And if you say no, it's likely that you won't even be able to get a quote. And if you do get a quote, they may specifically exclude that. But if your policy is silent about it, or if you've got an active policy in place, and just because MFA isn't implemented doesn't necessarily mean that you'll be denied coverage for it. If you don't have MFA in place, get it implemented today. I mean, that should be your number one priority right now. So that's the key claims driver. So that's insurers.
Right. And really, regardless of the cyber insurance process, it is such an effective control to mitigate some of these security issues that 100%, that would be number one on the list there.
And just a follow-up question that I see from Renee is that, hey, what if you say it is a control and you fail to implement it? So again, just work with your IT vendor to make sure that it's in place. Obviously, if you check a box on the insurance application as yes, and you say you do have MFA in place, but you actually don't, that's misrepresentation of information and the insurer is most likely going to rescind the policy, deny the claim, and rescind the policy. So just know that this is a key kind of requirement, or if in some cases, and again, we're kind of going away from that right now, because with the insurers may give you a window of time to implement something. Just make sure that that's a high on your priority list. If they say you need to have the incident response plan or MFA or whatever it is implemented within 30 days, you got to do it. Otherwise, yes, then it would. Then yes, you would be denied coverage.
Yeah, absolutely. So the next two dot points are kind of a little bit related, right? The shift to zero trust and the internal segmentation. The zero trust is kind of a buzzword now in cybersecurity, but it's basically acknowledging that notion of perimeter is obsolete. A few years ago, you had a firewall. You had all of your users behind the firewall, and that protection was sometimes good enough. Now that notion of perimeter is no longer there. If you're thinking about your remote workers, a lot of cloud-based applications, exchanging of data with third party, et cetera, et cetera. So the concept of zero trust is wherever your user authenticate, connect to your system, that'd be from home, from the office, from Starbucks or wherever, there's a concept that we don't trust until we verify. So users have to be authenticated. The devices that they're using have to be authenticated, have to follow specific security guidelines and configurations. And then from an internal segmentation perspective is making it harder for the threat actors once they get a foothold on your network, like let's say they compromise the user workstation, to move and access the server where the sensitive information is located. So that is more of something that is being asked, especially if you have sensitive information. It needs to be protected with controls like internal segmentation, for instance. And then we've talked a little bit about other strategies to mitigate the lateral movement with the checklist that was there before there. Privilege access management would be helping with that.
Yeah. Okay. You just David Trevy had asked a question about, does remote access mean just to data, or does it now mean email as well?
Yeah, absolutely.
You know, typically,
so everything. I mean, email is a system, and accessing email is a form of remote access. So yes, it is considered as it is a requirement to have that for most policies, to have that MFA on email. Absolutely.
Yeah, and I would just caveat that with it depends on the insurance question too. And some insurers will still specify just to a system or to a remote access to a system, and others will be more detailed in terms of like, hey, do you have MFA in place for this, and this, email included? So even if so again, the key takeaway here is like, hey, what are the trends? The trend is it's going to be all encompassing at some stage in the future. So as you think about your security best practices, think about, okay, well, what's that next level? If you only have MFA in place for remote access, okay, well, what about email? What about other tools and systems that you have in place?
Yeah. So data, incident survival. So we've just got a few slides. I'm going to go through that very quick because I want to make sure we've got time for questions. But let's say something happens. So next slide is up. So let's say you have we've talked a little bit about that. As you update your incident response plan, or you develop your incident response plan, make sure that you know who you're going to call for external counsel. You want somebody who's done that before. You want to make sure that you've got that relationship, and select your forensic partner. Again, most of the insurance companies would have panel of firms that you can pick and choose from, but they've got different rates, they've got different approach. Some may be local. If you work with a partner like us, you can ask your insurance company to add a firm to your approved list of panel. There's a process for that. But the key here is make sure that you prep and you don't wait for an incident to kind of realize that you've got to make this phone call, and you don't really have the time to vet the right partner for you and your organization. So next slide. All right, so something happened. In the best possible scenario is you've got an up-to-date incident response plan. You're going to follow the steps. Call your insurance carrier. It should be one of the first steps in your incident response plan if you suspect that you're going to need them to help you. And then don't forget to manage the narrative of the incident. And that's why also most of the time, as part of your policy, you're going to have a public relations coach that's going to help you with that. It's not just about managing the communication to your customers, but making sure that it is also managed internally, that you can communicate back to your employees about what happened and what they need to do. And then the data breach coach is going to help you with the concept of attorney-client privilege, making sure that only people in the known can access the information. And then the last slide is, if you don't have an incident response plan, Jack, if you want to advance one more slide.
Sorry about that.
No problem. So NIST has got a template that you can use. That's the special publication 800-61. So you can Google that and download the template. It is fairly comprehensive, but you can use that as a baseline and modify some of the sections to make sure that that is a fit for your organization. So if you don't have something, if you've not had an opportunity to test your plan, you're in the process of revamping your plan, you're thinking about doing some improvement, then look at this free resource. It's really, really good. And if you don't have a specific framework, then there would be an initial recommendation is to take that as a first step.
All right. I know we've answered a couple of questions, so I'm just going to go back to through the Q&A, and I see one that Renee asked initially in terms of what kind of risk management tool. I think he was referring to my comments around the co-insurance questions. So really, what it was, it's an online platform that particular insurer partnered with, and it provided some phishing simulation testing and training. So the issue I have it's a good tool, but the issue I have is that there's a requirement of the policyholder to use it. So that's what from an insurance broking perspective, I don't like that. I like the concept around, hey, you've got a risk management tool that you access and use, but there's what if someone forgets to subscribe, or then there's a potential, they don't have interest in it for whatever reason. But there's the risk management approach is good. It's just I don't like the requirement that there's a penalty if you don't adopt it. And I know why the insurer is doing it. They're trying to drive concern about claims, concern about see this as a high risk area, and so they're kind of trying to reduce it. And they can have these requirements in place because of these changes in the marketplace. And then Lee asked, how should a small to medium-sized business handle vendor security management? Do you want to start with that, or do you want?
Yeah, I think there's different layers to that. There's, typically what we see is making sure that there's an inventory of vendor, and then you define the control that you would expect your vendors to have based on the risk. And most of the time it's going to be based on the access that they have to your information and your data. So for instance, let's say you're working with an IT provider who's going to help you doing some IT management work. They've got all kind of access on your network. So if you have requirements, if you have a security control framework, they should adopt the same thing, and they should be able to tell you how they are enforcing specific controls. So that's done through a legal agreement, but also that vendor risk management program is defining, again, what are the suppliers, what are the vendors, what are the controls that we would expect them to have in place based on the criticality and the risk that they have against the environment, what kind of data they've got access, et cetera, et cetera. So low risk could have just an agreement in place, for instance, and maybe for the higher risk vendor, you would require them to go through an annual security assessment, pen testing, or have a security certification such as SOC or high trust, or depending on the industry and what you're trying to achieve.
Thanks, Guy. Kara asked, how do you cyber criminals identify targets, and how can you reduce your visibility as a target to criminals? Well, I guess there's a number of different ways that they target you, and a lot of the information is already available in the dark web, and I sort of think of it as a massive sales funnel, particularly when it comes to social engineering fraud. They buy email lists and other data points, which they try to map together, and then out of the 1,000 emails that they send and spend, they know that 10 will open the email and 1 will click on the link. So so some of the information is already out there. A lot of the information is already out there, and so it's difficult to kind of prevent that. And then that's really where your risk management, your best kind of best practices, protocols come in place to mitigate that risk. Yeah, I don't know if you want to weigh in on that or.
I think it's a matter of trying to be resilient against opportunity attacks. So trying to make the job harder for the threat actors so that they can go and try to infiltrate the next organization. So again, once you have something like MFA in place, it's a little bit harder for them to get in. So they tend to compromise organizations that don't have this control in place. But there's all kinds of things that you can do looking at your attack surface, what IP addresses you have on the public internet, what services you have open, do you need these services, how kind of you limit that access. For instance, if you only do business with US organizations, then you may want to block some countries from being able to access your network. So there's kind of a few ways based on your risk profile and what we're trying to achieve. There's not a great answer, but there's multiple ways to mitigate a little bit that risk.
Yeah, and I know we're up on the hour mark, but just two more kind of comments. Last two questions. One, Renee mentioned it doesn't seem like we need insurance, but a good forensic partner and external counsel services, counsel service, and then also, can you get your rate down in terms of having more favorable third-party assessments? Kind of working backwards. Right now, insurers they're looking at some of these responses as sort of the bare minimum. Yes, some of the responses will reduce or impact the premium or the rate, but right now, the insurers there's an element of self-preservation. They're just looking at, hey, do you have the minimum standards in place, and if so, you're eligible for a quote. It's going to change over time, but I don't expect that to happen anytime soon. And then in terms of the insurance piece, the policy is really valuable in terms of it being a central kind of point of helping you address cybersecurity incidents. So there's usually a central point of contact, and then they triage with the different vendors of, okay, you've suffered a ransomware attack, this is what we're going to do, or there's a data breach, these are the vendors that we need to employ and rectify that issue. Same goes with any kind of cyber security incident. They'll coordinate that for the policyholder or for the impacted party, and then obviously pay for those vendors and any ransom demand or loss of funds or the cost of the social engineering fraud, etc. Our contact information. Iggy, anything you wanted to add?
We did get one more question. We got a question in the chat, and it said, "Do you think insurance companies will require certification of controls attestation services to sell cyber insurance?"
Where is that?
In the chat, not the Q&A. Just to me privately. Do you think insurance
can you repeat that question, Julian?
Do you think insurance companies will require certification of controls attestation services to sell cyber insurance?
Sell cyber to offer a quote. I mean, that's what the application right now is intended to do, is to kind of verify and that insight into, hey, these are our best practices that are in place. There's not a formal kind of certification process that they're requiring. Maybe that's going to come at some stage. Again, this where we were 12 months, even 24 months ago, things have changed so rapidly, and there's also sort of a hesitation in terms of saying, using a particular site with that insurer that I cited about using a risk management vendor. Yeah, that's good, but the threats may change over time too. So it's not just that one particular vendor, one area will cover you for all your cyber risks. So I hope that sort of answers the question. But if anyone reach out to me at then my email address or phone number, and same with Gui. I appreciate everyone's time today.
Absolutely.
So,
thank you everybody for attending.
Yeah, we appreciate it. So take care. Thank you.
Thank you.